What's going on, y'all? Hope y'all are having an awesome weekend so far. This is Z-Rex, your host, with some no noise research. Watching this price action here on the BTC. Look at that. I'm going to go ahead and switch to live screen right now. I didn't forget this time. Told you I would remember eventually. So, kind of watching this price action here. It was looking pretty good, and then we kind of just got a little monkey hammered earlier today. But we'll see. Still looking all right. Here's the channel. Couple pointers. I do timestamp all the videos, so you don't have to watch the whole 50 minutes to an hour long that my videos are usually falling into. So you can just go in there. Here, I'll just show y'all. And you go on here, and they're right on the top. Right there, you got all this stuff here. So, makes it a little bit easier to navigate. Sorry I missed y'all guys yesterday. Ended up getting a little distracted and got home kind of late. No worries. Let's see, let's get into it. I gathered some articles from last night. It's funny, I actually did the whole show, produced it all, and then was like, oh man, it's way too late. My energy level was low. Alright, let's jump into it. Oh, one quick thing I need to do. Hold on, bear with me. I want to make sure I got a chat box open, just in case. Please do sub, bell, and smash. And if you have any questions at all, please do put them in the chat box. I just opened it up so I could see it. Alright, guys. So right here. Boom. There it is. I'm in there. Good to go. Alright. Back to this article here. Bitcoin's non-correlation shows risk of diversifying cryptocurrencies. So correlation is just like if an asset moves up $1, then if it has a 1-to-1 correlation, then that other asset will also move up $1. If it has a correlation of 0.5 against what your beta is, the thing you're comparing it to, then if XYZ goes up $1 and ABC has a 0.5 correlation to XYZ, it's only going to go up 50 cents. So hope that kind of makes a little bit of sense. Trying to just crystallize that. So there is a belief that cryptocurrencies have a correlation to traditional markets, and that's an inverse correlation, is usually what people say. Let's see, to date the amount varies of, this is what some Yale studies and some other stuff of financial gurus and novice investors suggest that a properly diversified portfolio should only contain a fractional amount of crypto. And that's varying from 2 to 6%. A lot of people put that, like gold, precious metals are in that same range there. I think everybody's different, man. Do what you feel comfortable with. You know, don't get too confused with all these people saying you only need to put 1% max of your portfolio in any position, or 10% max in crypto across the board, or etc. or whatever, right? All right. Let's see. Let's get another couple pointers. Yes, here we go. This guy, in a recent interview on Bloomberg, Bitwise asset manager Matt Hogan suggested that non-correlation is not the same as inverse correlation. So there's no guarantee that when markets go up, crypto will go up. That's totally what I believe as well. It is non-correlated at the moment. It is still so new that it's hard to kind of build those correlations up, but that is changing over time and very fast. There has been times where crypto and, you know, NASDAQ or tech has been very correlated. Like we talked about the other day, Overstock in its chart. If you check out Overstock's chart, you know, it looks a lot like the Bitcoin chart right here. Run up, big run up, end of the year. I mean, it's very similar. So it's not like it's not correlated yet. Don't get your don't assume that when the markets sell off hard that Bitcoin's just gonna like quadruple. Okay, I think it's more likely that markets and Bitcoin will go up together, and that crypto will fuel the market's next big run up. If there is a correlation, I know a lot of people think this is crazy, but I do think, given the upside risk to Bitcoin and crypto in general, which means, you know, there's more explosive moves to the upside than to the downside. Oil, gold, other commodities like that are in there. We've talked about it a little bit. You know, that no one's worried about gold going to zero, or oil going to zero, or corn going to zero, or any of these assets. So, with that in mind, I believe crypto, Bitcoin specifically, is the same way. And it moves so fast and hard to the upside. It reminds me of VIX, the volatility index. And of course, they're not one-to-one correlated. Almost nothing is. That's crazy. Unless you have really big sell-offs, then things get really close to one-to-one because everybody's running for the exits. But just I mean, let's remember, or if y'all recall, I'll jog your memories. Explosive upside is how VIX does it. It just will go up 50% or 100% in a day or something like that, or a couple days. That's what Bitcoin does. If y'all recall, in December, in 3 days, Bitcoin doubled. Okay? And if you're like, what the hell are you talking about, man? Well, let me just go ahead and show you. Let's go to BitWEX token. No, we don't want that. Put it on a 3-day candle stick here. Bam. This candle right here. That's only 3 days, and we went from 11-ish to, what is that? Okay, so almost doubled. 11-ish to 17. We'll just call it 11 to 17. In 3 days. That's a huge move, all right? So, but yeah, don't get tricked into that correlation thing. We need more time to see that. And this guy said a study has shown that when a scale between 1 and -1 is applied, Bitcoin hardly ever moves beyond 0.5, which shows that Bitcoin's price action is hardly linked or impacted by events taking place in larger financial markets. So it's kind of its own little thing right now, which totally makes sense. There is this: Bitcoin is closely correlated to other cryptocurrencies. Means that altcoins are less likely to decouple or deleverage from Bitcoin's price action. We've been discussing that over the last few days a little bit, that Bitcoin has to lead this pack. It's not going to be other stuff. So it is king at the moment. All right, moving on. UK Crypto Futures Exchange adds Bitcoin Cash contract. What? I know all you maximalists are super excited about that. I'm not too familiar with Crypto Facilities, the company, but it is a UK-based crypto futures exchange and a CME Group partner. Okay, so that is pretty interesting. The contract joins the company's already existing Bitcoin, Ethereum, Ripple, and Litecoin futures contracts. So these guys are building up pretty well, and interesting that they are partnered with the CME Group, which is one of the bosses in the futures game. All right, so they said, the CEO of Crypto Facilities said the Bitcoin Cash is a top 5 currency by market cap, so it's a logical next step to add it. Totally makes sense. I agree. They said they've already seen volumes as high as 180 million in a 24-hour period and have an average daily volume ranging from 20 to 60 million notional per day. Okay, so that'll probably just grow over time. You know, that's pretty awesome. We're going to get more and more futures and derivatives on crypto, whether you like it or not. All right. This next thing I'm going to talk about is going to be slightly winded. I've seen a few people talk about this new alternative to the ETF here in the States, and you might have read an article on it. It's about an ETN, which is an exchange traded note that got listed on Wednesday of this week on the US markets, and it goes under the ticker symbol CXBTF, and it looks something like this. All right, pull that up. It's not going to have any really data on it, but we are going... Oh, did I spell that wrong? Looks like I did. CXBTF, CXBTF, not TBF. Crazy ticker. All right, so as you can see, this is very, like, whatever. Just got listed for trading on US markets. So an ETN and ETFs are a little bit different. I'm going to go over a few of those things because people I'm already seeing, they're just like, oh, this is already the best. Like, you know, this is awesome. It's an ETN. It's the same. It's not the same. It's how the product's structured and the underlying is very different. Okay. And so we're going to just go over a few key points. I'm not saying that it's bad or good necessarily. I'm just trying to make it to where maybe you can be a little bit more aware of what you're getting into if you do decide to purchase this. So it's based off a product called Bitcoin Tracker 1, which started in 2015 in Stockholm, on NASDAQ Stockholm. Okay, so that's been kind of a while ago, right? That's pretty impressive. It's already been out for 3 years over there. These investors can purchase, they're called F shares, which is like foreign. So they are traded and executed in dollars, but they're settled, cleared, and held in custody in its home market. So they just do all that for you. You buy it, and on the back end, it's settling between them. It's not, that's just kind of technical. It's not really the huge difference. That's not where ETNs come into play. So an ETF actually has assets in a basket in there that the ETF is based off of, and it creates shares to balance those prices. An ETN is actually a debt instrument. It's different, right? So there is no underlying in an ETN. It is just purely a debt-based contract. Okay, so a bank usually issues it. As you can see here, often a bank, and it's not, rather than a pool of assets, okay, that focus on an esoteric strategy. So people are already saying, you know, Bitcoin Tracker 1 is like the alternative to the Grayscale Bitcoin Investment Trust, which is the GBTC. That's been around for a while, which has high-ass premium. If y'all don't know about GBTC and the premium, you can go to this really cool website this guy has. And if you just Google GBTC Premium, it will pop up. But the website is neotechdevs.com/GTPC. And you can put in here, and it just is real simple. All it shows is pretty much the premium. And you can go to a chart too, if you'd like, and see the premium that way as well. So right now it's about 37, which is on the lower end. It usually doesn't go much lower than like 30s. It's usually around 50. Okay, so you're paying a fat premium just to get in to Bitcoin. So I'm not a huge fan of this instrument, but it does exist. So now this part, I'm not sure. It says that the notes are issued by XBT provider AB, which is a subsidiary of the UK-based Coin Shares Holding. Which they're saying, I don't know if this author is correct or not. ETNs don't work this way, so I think this might be a typo, but just food for thought. Which purchases the relevant amount of Bitcoin needed. So they don't actually have to buy any of the Bitcoin. They just need to settle it and make sure that the fund stays solvent, but you're up to their mercy, right? There's nothing in there. They have to manage it right. If the bank goes under, then the ETN can easily go under. It's based on their credit ratings. There's a lot of other factors, since it is a debt instrument versus an actual basket of assets, or just an asset like GLD or something like that, or SPY, which is the S&P 500. So they asked the U.S. Securities Exchange Commission. They declined to comment, which is pretty funny. Of course they did. They're like, we don't want to talk about that. What? You can already trade this kind of stuff? One thing that is nice, and we'll get into that here in a little bit. Here's some more key differences. I pulled up a couple different articles and researched some stuff for you guys. instead of just being like, oh, you should just buy this instead of GBTC. It's better. It's the same. It's the new ETF. Well, it's different. Remember this. So ETFs are an asset in ETNs. Here's a summary, quick, fast summary right here of the difference. ETFs are assets, as I said a minute ago. ETNs are debt. ETF price equals value of underlying investments plus trading cost to create and redeem shares. ETN, exchange traded note, is excuse me, equal to the value of underlying index. So there's an index that they create, you know, usually probably a basket of the current or the exchanges, and then they make their, you know, they base it off like an average or something, like how most people do it, plus the default risk, which is the company, right? So you want to make sure that these guys are solvent, and the supply of shares. All right, just a little history. The first ETF traded was SPY in 1993, and about 10 years later, Morgan Stanley introduced the first ETN. Of course, exchange traded products, the growth has been exponential since their first introduction. Most people trade on the SPY, and it gives investors like a really, you can kind of trade however large or small you want with SPY. It's pretty nice. You got dollar-wide strikes. It's a tinier product. You can use options on it. They're very liquid. It's one of the most liquid products, in and out all day for sure. So, and I like this, how he wrote this, Adam Hoffman. He wrote, today, investors have access to products that seek to track the performance of nearly everything from plain vanilla indices to vanilla extract. And that's very true. There is ETNs and ETFs for everything. There's actually a few ETFs, I believe now already. They're called like Block and Ledger and some other things, but they're like just kind of baskets of other companies to that are like getting into the crypto space. It's not like the same as the, you know, Bitcoin ETF. So another, like I just mentioned here a minute ago, both typically have relatively low cost in comparison to accessing the underlying investment separately. And if you don't know what that means, let me just show you real quick. So if you want to go to the S&P 500, right? So that's SPX. It's a $2,800 index, right? That's pretty large. Even if you go to the futures contract, you know, it's going to be $2,800. And to buy this, you have to put up about $4 grand, okay? And it's 160 or 70,000 notional. So you put up $4 grand to control like $150,000. Okay, that's some pretty serious leverage, right? You know, people are like, whoa, that's pretty serious, man. Like, damn, that's like some Deribit or BitMEX leverage, right? But you can go to SPY, which is the same product, everything, right? It's just a tenth of the size. As you can see right here, it's 285, and it works and moves exactly the same. It is arbed to the penny, okay? So it is a very good product. It's very liquid. I've traded it a lot, and like I said, with options, you can get with dollar strikes. You can pretty much set your risk however you want, your delta exposure. So delta is just your directional exposure. So if you buy one Bitcoin and that's all you do, when it goes up $100, you're up 100. If it goes down 100, you're down 100. So you have 100 positive. Like if you buy one Bitcoin, you have 100 long delta. You're 1-to-1 on the movement. So what if you bought one Bitcoin and sold half of a Bitcoin against it with futures or something like that? Then your delta exposure would only be half of that. So if Bitcoin goes up $1, you're only going to make 50 cents because you have half of a Bitcoin against your full Bitcoin. And I'm not sure if I'm losing some of you guys. If you are listening live, feel free to ask a couple more questions. I can go into more details about that. But delta is very important to understand. Okay, so back over here to the difference they have. Since they're low cost, you can get in and buy SPY for $285. You can just go buy it literally outright. You don't have to use options. So $285 is way cheaper than $2,800, right? This is like cash secured, so you put up $285 to open it, and and that's your risk right there, and it's already built in. And there is dividends paid on this, so do be careful if you short call premium. Without going too much into that, I do need to talk about options more. I believe if you short call premium, and if the price is over your strike, there is a possibility that you will have to pay the dividends. You don't want to do that. It's best just to keep rolling. Anyway, before I digress on option action, let's go to, you're like, well, what's an F share? I'm not going to go into everything what an F share is and all these details. I just wanted to point out something that was interesting in some of my research about this was, so more than 2,000 companies with primary listings on more than 30 global markets have an F share on OTC markets, which is over the counter. And we're talking London, Frankfurt, Paris, Madrid, Milan, Toronto, Tokyo. Like that's, I mean, it's a huge thing, right? One thing I did want to put on here is that the creation of F shares, of an F share, indicates that there is already demand for the shares and is valuable to facilitate. It is valuable to facilitating global liquidity. That's pretty. I like that verbiage because it's kind of saying, in the crypto context, they just approved an F share from a different company, so they're not talking about F shares. You know, they're not. No one was really even talking about this ETN. There was a guy, I can't remember his name, in November that talked about it, but you know, it was just kind of, it was like had a huge volume. It was like more volume than most ETFs and ETNs on the US markets, which is pretty damn wild. All right, like, I was trying to verify that. I couldn't find anything really great. I did go to this just to show y'all, and this has all the data points and the volume. And what he was talking about is, if you go down to November here, there is some really big volume days here. You got 1.7 mil, and the turnaround was like $1 billion. This is probably the day he was talking about, or like one of these days here where $1 million and half a billion turnover. So there's a lot of volume on this product, and it's been out since 2015. And apparently these guys have a good rep. I don't know anything about them, but apparently their rep is good, and they have a good history of maintaining liquid products that stay solvent. Okay, because again, remember, ETNs are debt instruments. There's a very big difference than an ETF. Okay, please do be aware of that. And if you don't like debt instruments and you don't want to put your money at the mercy of Bitcoin XBT and Bitcoin Tracker 1 from going bust, then don't mess with it. That's pretty much, it's like, if you can't handle that, then you don't need to touch it. Okay, maybe just try to buy regular Bitcoin. This is just an interesting, cool thing over the last since 2015. You can see this is the price of the asset, and it has been tracking Bitcoin very well over its time. As you can see, this graph looks almost just like it. So they have been doing good thus far, so I will give them credit for that. But like I said, just do know the differences. ETFs, actually, they have assets in them, and ETNs are debt instruments. Okay, so it's very different. They're subject to insolvency issues of the issuer, which in this case is Bitcoin Tracker 1. All right. So far, though, they have been doing very well. And you can see, if I push this out a little bit further to 15, it looks just like a Bitcoin chart if you pull it up. So I hope that they keep doing well. That's pretty awesome that they're doing that. And we need more products like this, I think, and this space just keeps growing. And we'll see who the weaker ones are. And the fact that they're still in this game after this bear market and being, you know, got kind of murdered is saying a lot, in my opinion. All right, so like I said, sorry that was a little bit longer winded. I warned you, but I think it's very important to differentiate, and it's not the same as GBTC. Different products. All right, to markets we go. Oh, let's see what's going on today in the crypto space. Everything is kind of just chilling, it looks like. Any big movers in the top 10? VeChain, of course, was already popping off. We saw that. Let's see in the last day anything. Kind of just selling off from some of these run-ups that we had. Nothing too exciting, it looks like. Actually, in the last 24 hours, there's barely any green. That's not the best sign, but oh, here we go. Tata 2, you know, the new Bitcoin. Tata 2. It's totally it. It's replacing Bitcoin and Ethereum and Ripple together, if y'all didn't know. It's revolutionary. So yeah, not much stuff is up. So everything's kind of taking a little liquidation breather break here. See, volatility 7 days still kind of low. We are having some things bounce off of some of those big, not like big 90s numbers over here from percent down from all-time highs. So except VeChain, you know, VeChain's still getting its ass kicked. That's okay, but dominance still above 50. It's holding. Let's go over here to the coin, the market cap, not the coin market cap. So as we've been talking about, we need to be able to get above about 225, and man, boy, did we just tap it 224 and then have sold off. Doesn't mean that this is over and it's going to roll over. It also doesn't mean that it's going to go up. We just need a little bit more information and time to go by. So be patient, guys, right here. Let's look at it on a little bit bigger time frame. Yeah, if we can get over to that 25 billion, 225 billion, you know, that should give us some legs to run up. I would say to probably this 250-ish area, maybe somewhere in this chop. Hopefully that's kind of where we're working towards. If not, we are going to have a brutal next month or so. So speaking of the Bitcoins, the markets, and it being semi-brutal, it was earlier for you guys that were like maybe got long up here and we're like, oh, it's turning around, and then it just got slapped. It did definitely hurt. We still are doing this weird A pattern. Oh gosh, here we go. Twitter, I know Twitter's already calling this right here, head and shoulders. I know it. I can already hear it. Right? Yeah, it could be. I don't know. Head and shoulders isn't like really my favorite pattern. I actually don't really care that much about chart patterns per se. Only a few of them, like rounding formations. And I don't know. I just look at other things and mostly price, because it gets a little bit crazy when you get too much into patterns. You start like forcing things that really aren't there. Like this could be a head and shoulders, of course. Anything can happen, but let's see what volume looks like on it. It's interesting. Okay. I don't know. Like I said, I'm more of a price guy. You can like, it's like Elliott Wave. You can just put anything in, subscribe anything on there. It's just too subjective for me. Because everybody was saying this is inverted head and shoulders, right? It very well could have been. It's a little sloppy though, or is it? I don't know. Right? Is this one too? Yeah, I don't know. It's just too much. There are a few patterns that I do like a lot, but head and shoulders, most of them, mostly distribution accumulation patterns are better. All right, so let's go back to just price here and check this out. What we're doing. So we did have this daily close above 65. I was looking for that, so that is very nice. I'm excited to see that. After doing a little bit more analysis, 66. I should have been saying 66, because if you go back to some of these wicks, they're right all about in that level. 66 is right where my horizontal is, right there, and as if you can tell, that is where all these touches and wicks get sold off. So I am going to adjust that to 6,600. If we can close above that on a daily, that will be very bullish and give us that run up to, you know, somewhere probably against this trend line would be my guess, which if it happens soon, that is still putting us in what we've talked about being in the mid 7,000s. All right, so What about the bear case on this? All right, so since we did kind of close above this action over here, and now we're battling, now all the business is actually kind of being done today so far inside of that previous day's range. All right, so that is a decent sign. And let's look at it on a 4-hour just to get a little bit more granular here. So if you have the beginning here of the day, and now we're just kind of chopping around all in this. Now we are below the 21 exponential on the 4-hour. It's not the best sign. It's not a huge issue, but it's not a really great thing to see. That's for sure. All right. So if we go to, let's look at some internals while we got the 4-hour up. Let me adjust this a little bit, my chart. All right. Volume on this is very, very minuscule, though. If y'all can see right here, we're not having anything above average volume. And if y'all see my volume chart, I kind of shade it out on the bottom. I can still kind of see it, but I don't really take that much note to it or care that much until it comes out and I see it poking above this little gray cloud here, if you will. That's just how I do my volume, but everybody, of course, is different. It just kind of helps me remove some of the noise, which is what my whole goal is for this channel of no noise. Speaking of, if you enjoy any of this, please sub, bell, and smash. That would be great. And do look in the description of the videos again for those timestamps. And I'm adding kind of support things and links and things that I use. If you want to go in there and kind of use those, it's free for you to do so, and helps me out just a little bit. That would be greatly appreciated if you are loving what I'm doing. If not, then don't, and downvote me and close your browser, get out of here. You know, that's cool too. Not gonna hurt my feelings. But here we go in the daily. We're getting bought up off the bottom of this, but we need to be very careful here. My floor right now, as you can see, one of my alerts over here is 6,200. That is going to be kind of my like, ooh, shit, the bulls lost the strength. And then my WTF stop, just in case, is about 60.50 below these wicks and below some of these bodies right around here. So I still am leaning slightly bullish here, and based off of my other indicator my custom indicator that I have, it is right on the money before it's about to roll over and be bearish. It's very close. It's within like $50 or something of giving me a signal based off of that one alone. Let's look at an hour, see if we can see any kind of cool stuff. No, we don't see any really cool things on the hourly. Actually, it doesn't look super great. I don't like the hourly formation thus far. Let me see, what do I have this big, what is this yellow line on here for? Sometimes on the time frames it messes it up. Oh, okay, there it is. So it's the daily. Alright, so bears are getting weaker and weaker, as y'all can see from this yellow line that we've drawn on here. But the bulls are not stepping up yet. We need them to get up in this teens, in the lower 20s. We do have the bears falling off pretty hard the last day. But, you know, this candle, depending how it closes, I guess it does close in U2. No, not U2. No Bono, please. U2C at 7 o'clock. So we got about 2 hours. This obviously isn't going to go that long. But let's go to Ethereum and see if it's given us any kind of info. As we talked about, Ethereum with this really good capitulation candle and the hammer with the volume that's needed to show that. It's still slightly bearish, though, as not a surprise. Ethereum has been looking weak for a long time. We've been talking about it all up and since it was over here, just kind of not getting any strength and kind of just getting rejected off of this the third longest moving average that I have up here. So it did not like any of that action. So if we go to the 4-hour, some internals. Bears and bulls are in the neutral zone. RSI is slightly weak, but mostly, you know, for internals, I like to use ADX, okay? And DMI. I just removed the ADX part and use DMI plus and minus, which you can kind of think is green. DMI plus is like for bulls. DMI minus is like bear strength. Talk about this in other videos. If you're above that, if either of them are above it, both of them won't be above it at the same time. That is very rare. I've seen it a few times, but it's super rare. But when it is above the mid-20s, that whichever it is, bulls or bears are in control, okay, period. And if that coincides with like being under moving averages, other things, remember you want to stack indicators. You like, unless you pretty much just use price and you're really, really diligent with like a simple moving average or like a trend line, then you know, you want lots of converging indicators to be stacking on top of each other to give you the best risk to reward, okay? And so here we are. ETH is really battling right now. It doesn't look terrible. We drew this new range box on here, okay? Because we got, let's go back to the daily. Yeah, we drew this new range box here. We need to stay above this green box, all right? It's very critical if we break below this hammer. These little inverted hammers, kind of symmetrical hammers, that's what it is. It's a new pattern, guys. It's a symmetrical hammer pattern, all right? It means Bitcoin to 20,000 in the next 3 hours. That's definitely what it means. So it's looking okay. This could just be a little liquidation break, you know, and do remember that bears were in very firm, they had a very firm grip on the control here. And so it's going to take a little bit of momentum and some bull strength to get that back, and the bears are going to try to slap it as this happens, all right? And that is what they are doing right now. Let's look at the hourly. Yeah, bears are all going to look like this here today, just because, you know, this morning that sell-off that happened, not a huge deal, but it's still kind of holding the support there. Nothing to take from it more than yesterday, I would say. You know, we just got to hold this about 280 area on Ethereum. Very important. Litecoin. Like again, Litecoin and Ethereum's charts have been looking almost exactly the same for weeks now. It's really boring. It's like, what is this, the same chart? It's like, what are these regular altcoins where they all have that ugly ass pattern where it's just like, oh, it's up, it's good, and then it does like just dies. That's an altcoin super pattern right there. This is good. I like the support on this one is going to be this channel for me, and a hard stop price of probably about 53 bucks. Okay, and again, we're in the neutral zone on the 4-hour here. The bulls got pretty strong relative to Ethereum on Litecoin. They really kind of showed up and got above that 28, and now the bears are like, wait a second. But guys, do remember, this could just be a very healthy liquidation break. Fibonacci is about 5,500 on this retracement, so that lines up good with about my 53. I always like to give myself a little bit extra cushion, especially with the more volatile product, to make sure you don't get shook out. Let's see if we see anything. Yep, same thing. Bears are going to look stronger on the hour right now in the low time frame. If y'all are watching these videos, y'all know that I don't really trade the hour like at all. If I do use it, it might be for a management to take some profits off of the table. Okay, that's about the only time I use it. I do not use it for entering trades, not for initiating. All right. On the 850, we are looking actually a little bit better on the higher time frame right here. We finally have the bears getting below that high 20s, and the bulls have come up into this battle zone, which I like to call the middle neutral battle zone. So let's see who reigns supreme out of that over the next day or two. I have been kind of not that impressed with the what is it? What can I call it? The lackluster movement over the weekends. Like Bitcoin and crypto used to move a lot on the weekends. Now it seems like Saturday is kind of like a sell-off to just boring day in the last little bits. I'm not sure if y'all feel that too. Maybe I'm just focusing too much on the wrong things or something. I'm not sure, but it's just kind of odd. It seems like the bigger days that it moves are now like a Monday or like a Thursday in the week. I don't have any. I'm just like going off the back of my head and from trading and stuff. I don't have any like stats for that. Ripple got on fire. Y'all can see this. It did 50%, guys. It just roared. And we did talk about it when it broke 40. It was going to go into the mid-20s. And if you had balls, that was a decent spot to take a long. I did not. I had no trade in that, which is kind of dumb. I do like Ripple a lot, and I was hoping it would go back into the 20s soon, and it did, and now it's already out of it. See how fast that happens? Opportunity, guys. It goes quick in these markets. So here we are. We're above the 55 and the 21 EMAs, and we're sitting right on top of them. This looks pretty good. This could just be consolidation for a next leg up. But again, if you measure some fib right here, you got about 30 cents is going to be your 618. So that would be a get the hell out of the way, close it down, or short if you like to short. Some people do, and you can short XRP on, I think, Polo. I know BitMEX you can. I believe Bitfinex you also can as well. So if you want to do that, definitely go check that out. So again, 30 cents on the rips. And the 4 hour looks great. So Ripple is actually showing a little bit of relative strength based off of my internal indicators against the other top pairs. And I'm actually even getting it on the 850. So that is a good sign. Now we just need to see it on a daily, and that would be real nice. If we saw that on a daily, we could definitely see, let's do a measured move here from this recent sell-off. Bam. So we could easily see about 60 cents. Okay. Keep that in mind. That's even doubling almost from where it is now. Of course, this is never trading advice. These are my opinions. This is for educational purposes only. And speaking of that, if you don't know how to do a trend-based fib extension, is what TradingView calls it, you can go over here to the pitchfork menu. It's the third box down over here. If you're looking in the top left, man, I need to remember this one. I can't remember all of this stuff. Jeez, I need to make a better list here. So there we go. Back, we're on full screen for the last 3 minutes. I know it's important. Anyway, pitchfork on this screen where all the fib stuff is. Go to trend-based fib extension, and you click that, and then you measure the. So if you want to measure like this sell-off, like an extension, if it gets reversed from that sell-off, I go down. You start low. You go about to where you want to measure that here. I'm chopping it through the middle, like over here too, where all this is basing. And you go there, and then you come back to where it was here. And that's how I use this. It works very well. It has for a while. Fibonacci's awesome. There's probably another way to use this too, but this is how I use it. And so this projects the targets to the upside. So if you break some of this momentum, then you know here are some profit targets that you can look for. All right. So, and you also can do this to the downside too, right? Of course. So you just do it you just do it backwards. So like if you want to measure, but you would not measure that. You would measure like this. Okay. Actually, let's just go ahead and do it on this one. See if we've gotten close. See, yeah, look, a measured move off of this fib would be about 18 cents or so, which is about the base here. That would suck. I know no one wants that to happen, right? Not at all. So let's just hope that that doesn't go down, or maybe it does. Maybe you want to buy Ripple down there. Maybe you do. All right, let's go to EOS, everyone's favorite. I do believe that EOS is underrated-ish. I like Dan Larimer's projects, all of them. Steam It is awesome, and Bitshares is even more awesome. If you haven't used Bitshares, you need to go use it. I have a referral link in the bottom. If you want to click and use that, you can get discounted, heavily discounted fees up to 80%. So do be aware of that. Again, that does help me out a little bit. So here you go. EOS is coming right up on the middle of this channel. So of course there's going to be resistance here. That is to be expected. Let's just see though if it can maintain and push through this. We are in a downward trend and downward channel, so do not forget that. And I do not have my horizontals on here, so I'm going to go ahead and add those real quick while I've got it open. Boom, bam. And you're like, dude, that's not exactly there. Yeah, it's not. Well, this isn't exact. This isn't science, dude. It's more art. So it doesn't have to be, as long as it's within a point or two, it's like it's good for me. Here you go. Bears are in control on the daily still, though, on EOS. All right. So we are getting picked up on this candle. This does look kind of good. Let's see what these 618 retracement is off of that. Is about 493. Okay. So maybe you can just ratchet that down to this bottom of the wick and then go from there. All right. That could be a good stop if you have a long. If you want to get short, I would be careful with this. You could fade this pop here for sure. It's probably not the worst idea, but do realize that we have been an extended period of downturn in the crypto sector. All right. So let's go to Bitshares, just since I mentioned it, and then we'll do Steam it and then wrap it up. Here is Bitshares and the dollar. I'm sorry, Bitshares and Bitcoin. You can see here we're gonna have hard resistance about at 2,000 now on this trend line cross. Also is where the exponential is currently today, so keep an eye out for that. Let's go to Bitshares dollar. There you go. It's about 11 cents right now. Yeah, this trend line on the dollar does not look good. We're gonna erase that. That is irrelevant now. Bears still strong. They still strong. That's what I'm saying. Just be weary of these price actions and keep those stops tight. Be diligent. All right. Okay, let's go to Steam it is what I said. So we'll do Steam dollar on Bittrex. So Steam is about 90 cents, which to me is crazy that Bitshares isn't closer to that. I mean, I get Steam's awesome. You get the upvotes, you get paid. It's like a decentralized Reddit where commenters can even get paid for making awesome comments. That's super cool. Stop hating on Dan. Yeah, some of the metrics were messed up on Steam, but you know, they're hashing it all out. It's working out. These are all growing pains, man. It's 90 cents, which is mind-blowing to me that Bitshares is only 11 cents because Bitshares is a decentralized exchange. It is a real decentralized exchange too, by the way. And it's all on the chain, and you can do margin on there. It's built in. It's really slick. We'll do another Bitshares review, and maybe I'll do like an exclusive one and a separate video just for that, because I do think that it's worth it and extremely undervalued. All right, let's go to Bitcoin for final thoughts. Again, guys, here we are. We're bouncing slightly at the moment. All right, since I've started this show, we are up about 50 bucks or something. I did add to my paper long on this sell-off here. Again, like I said, my stop is that 62. All right, I'm gonna just keep that going. Why is this on here? I must have picked the wrong. I must have not picked Bitfinex. I don't. There it is. There's our box. Bitfinex. We're still in this range, guys. You're probably like, God dang, are we gonna do anything? Yeah, it's only been, you know, about 10 days of crazy chopping down here, so just be very careful here. We are in a critical zone. If we break some of these supports, y'all know it. We've talked about it. Look out below. Your targets are on the downside. I mean, after, like I'm saying, it's going to happen. But if we do break, like kind of this box, we could easily target this line. This is my line in the sand. This red line. I've had it on here for a long time. If price closes below this on a daily, we are going to be a little bit screwed. Or maybe not. Maybe you can sell and hedge your position. Get on BitMEX or one of the other places that allows futures and sell some futures against your position. Like I said earlier about Delta, like if you have 100 Bitcoin in the market, you can put, you know, one Bitcoin in a futures account, and depending on the leverage you use, which, you know, you can get up to 100 Bitcoin leverage, you could literally put that one Bitcoin in there and short 100 Bitcoins or 90 or almost all of it to completely offset any downside momentum, and then close those out when you do get some of the target zones. All right, that's a little bit more advanced. We'll talk about that in future. Above 6,600. All right, so with that said, I'm gonna go ahead and put this alert on here, close it out. All right, guys, so 6,600, and again, the bases have been the same. They are raised up a little bit, maybe, depending on your risk tolerance. You can go anywhere from like 62 to 64, and I think that's pretty safe. Below that, it's going to be way more uncertain, and your risk to reward is not going to be nearly as attractive. All right, guys, thanks for tuning in. This is ZRex over at No Noise Research. I hope y'all enjoy your Saturday night. Hopefully I'll be able to hang out with some friends later and play a little bit of poker and drink a few beers. All right, ladies and gentlemen, it's been a pleasure. Again, ZRex, No Noise Research. Sub, bell, and smash it. I will see y'all guys tomorrow. Peace.